please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
You're watching CNBC TV18 and this is After the Bell. Let's take a look at the top stories that we are tracking for you this Thursday evening. Markets snap a 6-day winning streak. Sensex and the Nifty end with marginal losses, but it has been a terrific January series for the bulls, with the Nifty gaining nearly 600 points, the best series in the last 22 months. Short-term dollar moves are not a big deal, says the US Treasury Secretary. This after the greenback hits 3-year lows after he defended a weak dollar. Rupee gains strength in trade. US President Donald Trump lands in Zurich, will make his World Economic Forum debut tomorrow after a strong backlash to his protectionist comments. White House suggests that Trump will attempt to explain how his America First policy is good for the world.
Incredibly attractive place to invest.
International investors looking at India see the potential for a multi-year, if not multi-decade, continued strong growth.
Global big voice is bullish at India. Johan Urich of A.T. Kearney says that manufacturing reforms will take more time, but Make in India is a positive step in that direction. Paul Sheard of S&P Global says that India's growth in 2018 will see a significant pickup. Strong sales growth lifts Maruti's top line in the third quarter. Margins are also bang on to target, even as profits miss expectations slightly. More time to bid for SR Steel as lenders extend the deadline. Company's promoters may join hands with Russian bank to stake their claim. Tata Steel, Vedanta, ArcelorMittal are also in the fray. Padmavat releases, but government inaction against the Karni Sena has cinema hall owners in Gujarat and Rajasthan worried. Gurugram police arrest 18 Karni Sena goons for attacking a school bus, charges them with attempt to murder in the FIR. Well, straight to the market action of the day. It was expiry day and it made its presence felt on the Lal Street as markets witnessed wild swings today. So let's pull that up for you. The Nifty was trading with deep cuts until noon and then saw a sharp spike post 1:30 p.m. to end almost flat. Now, Sensex followed suit and closed with cuts of about 0.1%. Bank Nifty, meanwhile, recovered about 300 points by the end of the day from its lows and ended in the green. Mid caps, however, failed to see the rebound that the Bank Nifty had seen. That index ended with cuts of about 1%. Let's bring in Anuj Singhal to take us through the day's trading action. Anuj, bulls seeing some amount of a breather today?
Well, interesting day of trade today. There was a bit of a dichotomy. The trade was volatile. At one point, it looked like there was a bit of a breakdown, but the Nifty and the Bank Nifty did recover. The mid caps did not. And that's been some bit of sign from the market that advanced decline has been weak through the last 2 or 3 days. Big banks moved today. ICICI, Kotak, Axis on the way up. And some other gainers included names like Indiabulls Housing, Ultratech and Vedanta. PSU banks, though, were down today, and it was clear and a classical case of sell-on news playing out. So stocks like SBI, PNB, OBC, the larger ones, were the ones which were down quite a bit. Other index losers included names like UPL and Dr. Reddy's post the earnings and Aurobindo Pharma. In the F&O space, the stock of the series, NIIT Tech, big gains today as well. DHFL and Adani Enterprises also gained. And on the losing side, you had stocks like Raymond, Ajanta Pharma and Amara Raja Batteries. All in all, this week, the market has given a bit of a warning sign about the distribution in the mid-cap space after the kind of parabolic rise that we had seen before that.
Okay, fair enough. Thanks, Anuj, for taking us through that. So, consolidation setting into the equity markets. But let's pull up currency markets then. The US dollar has tanked to a 3-year low, with the index currently down by about 18 points as we speak. The weakness comes after US Treasury Secretary Steven Mnuchin told the World Economic Forum that a weak dollar is good for American trade. And that, of course, was countered and clarified by Wilbur Ross. But the pain in USD infused some strength into the Indian rupee. So, let's pull that up for you as well. The Indian rupee is currently trading at the 63.58 mark against the dollar, up from about 0.15% from yesterday's close of 63.69 against the greenback. Now let's get you the big global voices from the World Economic Forum in Davos. India is an incredibly attractive destination for foreign investors. That's the word coming in from Johan Urich of A.T. Kearney. In an exclusive conversation with Shireen Bhan in Davos, Urich also talked about Prime Minister Modi's message to the World Economic Forum and said that the essence of Prime Minister's address was similar to that of Xi Jinping's WEF, that is the World Economic Forum speech that he had made last year.
Joining us now is Johan Orica of Etikani. He's a long-time India watcher and has been with us on CNBC TV18 several times in the past. Johan, always a pleasure to have you. Good to see you back on CNBC TV18. Let me start by asking you in the context of what you know about India, because as I pointed out, you understand the India story. What did you make of the Prime Minister's address here in Davos?
Well, the Prime Minister opened the week on Tuesday, so there was really a prime spot. Last year, by the way, it was the Chinese president, and I think it was actually very much in line with what China gave the message. It was India is growing and is doing well. India is open to the world. India is ambitious and knows it needs to change, but we are changing. We are making progress, and he gave examples of that. But it's important that the world stays open for trade and that we remain a global firm, a global world. And I think that was the key message. I expected that, to be frank.
Yes.
So he did not surprise me, but he delivered it really well, and I think the message is very, very important.
Talking about India and investments into India, specifically in the manufacturing side, and we've had this conversation in the past. The government's aspiration is to take the share of manufacturing to GDP to about 20% plus. You've just put out a report at Etikani talking about production readiness in the context of Industry 4.0, and you believe that there are only 25 countries out of 100 countries today that will be ready to embrace the changes that are upon us, and India is not one of them.
No, not. Because these things take time is the short answer. So Make India was announced
2014.
Exactly 5 years ago. No, less than that, 3-4 years ago. You cannot change an entire country, an entire ecosystem in a couple of years. These things take time. So among the countries that are in the leading countries, the top 25, you have countries like Japan, like South Korea, like Germany, like the United States, countries that for decades have been investing and improving and having an ecosystem that really works well. You need to be realistic, first of all. So I applaud the ambition of the Make India program. I really do, and it's really important to do it, by the way. But you also need to be realistic. These things take time to put into effect. I'm absolutely certain that India will rise, but it will take time, and there will be many steps to go.
So, outside of manufacturing, we've seen record FDI inflows into India, and Etikani does a attractiveness index.
We do.
So India continues to be on the radar, high up on the radar.
Attractive place to invest. First of all, there's the size of India. How many? The population growth is just tremendous, which is the biggest driver to GDP in the end. The most important one, we often forget that. It's really population growth. And India is the largest economy with the largest growing population behind that. That's number one. And number two is all the changes that have been put in place under the Modi government, opening business, the tax changes, the investments, etc. Make it an incredibly attractive place to invest. Any company worth its salt, so to speak, and who is globally engaged needs to be in India. There's no doubt about it. That's what drives it. We think it will continue to that way over the next years.
Do you believe that India can now position itself as part of the global supply chain? We've done it in certain sectors like automotives, pharmaceuticals, etc. But do you see India being able to position itself at the heart of the global supply chain across sectors?
That very much depends on the sector where you're in. First of all, don't forget, most of the investments and the foreign investors that come to India.
Well, we'll get back to Davos, but very important news flashing on your screen, some important numbers coming in. So the total GST collections in December have seen a marginal pickup compared to November. Now, it is closer to 87,000 crore rupees, still short of the 90,000 crore rupee mark, which is considered at the level necessary to maintain revenue neutrality. So these are the numbers that we have so far, 86,703 crore rupees to be precise. And a couple of other points have come in. 1 crore taxpayer have been registered under GST till the 24th of January. Of which 17.11 lakh are composition dealers, 56.30 lakh GSTR 3B returns have been filed for the month of December. This is again till 24th of January. For the composition dealers, for the quarter of July to September, the last date of filing GSTR4 return was 24th. A total of 8.10 lakh returns were filed for composition dealers, and that's about 335.86 crore rupees. But the number that you need to focus on is the 86,703 crore rupees. We'll get a few reactions, but Lata is in the studio with us. Lata, what do you make of the math? I mean, if you look at December and November and what we were expecting till Jan, what do you make of
well,
this?
it's actually a little better than November and October, where we did 83,000 and 80,000 odd crores. The important point is that as we get into January, we may not have too much by way of the old transition credit to be paid. So, you know, the collections could look a little better. And more importantly, from Feb, you will have the e-way bills. And therefore, the collections from Feb are expected to be very good. I think people will be happy with this number, although we are not hitting the 90,000 crore mark, which is what was the monthly run rate. That would have kept people happy. This 86,000 crores is still better than what people were expecting when the initial numbers came in, and definitely better than what the November collections are indicating. Mr. M.S. Mani of Deloitte is with us. Mani, how do you read this collection of 86,700? Par for the course or better than you thought?
Lata, I would say that more important than a qualitative judgment, I think what we have to bear in mind that this 86,000 is on the back of a steep rate reduction that we had, which came into force from 15th of November. So last month we had seen only half of the effect of that.
Yep.
And with half of the effect of that, the collections were 80,000. So December is a month where we have seen the full scale, collection. Now, with that, a full month impact of the rate reduction, if it is 86,000, I would not say there is reason to cheer, but I would say possibly now the curve is turning in the right direction.
Okay. Why would you not
because
say...
bear in mind that when GST started in the first month, we had a collection of around 92,000 crores, if my recollection is right.
Okay.
And then we were expecting the tax to stabilize and move ahead and increase over a period of time.
Yes. Mani, can I come to you in a minute? We also have Thomas Isaac, the Finance Minister of Kerala, with us. Do stay on, Mani. Mr. Isaac, 86,700 crore, how does that number ring to you? It's 10%, almost 8% better than the November collection.
Well, I'm pleasantly surprised.
Okay.
Because I was thinking the collection would go down further. Because full impact of the reduction of 28% commodities was going to be felt during this month. And this means that either the tax base has widened or certain sectors' compliance have improved. I mean, I don't know.
Mr. Isaac, do you agree with the point that Mani was making, that this could be because of the rate cuts that have come in the last few weeks itself?
Pardon?
Do you agree? Mr. Mani was making a point that this could be because of the rate cuts, the recent rate cuts that we've seen.
So more people are registering, you mean? Yeah. More people are paying?
No, I don't know. I don't think so.
Okay.
Because I don't think registration is going up that
it isn't.
Significantly.
Well, composition dealers have filed 8.1 lakh returns. Is that satisfaction?
No, mostly it is all a nil return. Okay. And in fact, one has to very systematically look into their returns. Whatever information that we have shows that majority do not make any tax payment at all. They use a return, but there's no tax coming in from the...
Okay, now there are 1 crore taxpayers, and of that 17.1 lakh are composition guys. And the composition dealers filed 8.1 lakh returns and paid 336 crores. That is the information we have. I take your point about being dissatisfied with the amount you are getting from composition. But would you say, as Mr. Mani was saying, the curve has turned? I mean, we fell from, September, October was lower than September. November was even lower because of the rate cut. But December, despite a full month of rate cut, is 10% higher than November. So the curve has turned. More people are getting comfortable?
Yes, I think the system is stabilizing. And I think with the e-way bill coming in, it is going to further improve. And also you must remember all this money collection is on the basis of 3B, which is just a summary return.
Yeah.
So one system is not in position yet. So if in the coming months, I think there should be further improvement in the collection.
Okay. How much are you expecting, sir, once the e-way bill is in place? Because then leakages become very difficult.
I think there is very significant leakage in place, particularly with respect to movement of these initial.
We are losing you. We are losing you, sir. You will have to repeat that. Oh, okay. This is getting you
Mr. Isaac on a bad line. Mr.
Sir, I think we'll redial if you don't mind. We are missing what you are saying. We'll redial you in just 1 minute. We have Lakshmi Kumaran of LNS also with us. Before I get to you, Mr. Lakshmi Kumaran, we were just listening in to what Mani had to say from Deloitte. Mani, you were making the point that looks like it has dipped and the curve is now moving in the right direction. You think we could be doing much better in January?
I certainly think so, because the key point to be noted is that the global experience in other countries tells us that if the rates are reasonable and the compliance processes are manageable, more and more business start paying the tax.
Yeah.
In the initial month of GST, we have had a lot of pickups as far as the compliance process is concerned. And therefore, in a month where the rates have been significantly reduced on 170 odd items, if we are seeing an increase in the collections, to me, it signifies that the curve has truly turned now. People are feeling that the rates have become reasonable. The compliance processes are now manageable. And possibly, therefore, as we move along to Jan, Feb, and other months, it will only improve. Some of the anti-evasion measures that are being introduced.
The curve has turned, that we agree, but by when do you think the 90,000 mark will come in? Another few months or sooner than that?
To my mind, I would not be surprised if we see that in the next 1 or 2 months.
1 or 2 months itself.
Okay, Mr.
I don't think it's going to take long, because some of the anti-evasion measures which are being put in force from 1st Feb, and I'm not referring only to the e-way bill. In addition, there is a transition credit scrutiny that is going on for all large corporates. So there are several steps that the government is taking to, ensure that collections are in line. And that is why I would believe that the collections of December may turn out to be the turning point or the tipping point in the GST story of India.
Okay. Just coming to you in a minute, Mani, to also get your idea as to how much do you think things may improve in February after the e-way bill becomes mandatory. I'll just have a word from Lakshmi Kumaran as well. Mr. Lakshmi Kumaran, your opinion on this 86,700 crore December collection after a fairly, what you can call a giant rate cut?
Yeah, I entirely agree with Mani. And there is definitely a brighter side. And with the rate cut and the full month, if the revenues are going up, in fact, I'm really happy to note that the revenues have gone up to 86,700. Even though the base is lower and therefore the percentage will appear to be about 8%, etc. But I would say that this is a welcome sign. And introduction of e-way bill and then also other anti-evasion measure which the minister was talking about in the last GST council must also improve the compliance level higher. And as the practice and then experience in all other countries also, lower the tax rate, larger the tax base, the larger the collection. That is the principle. I think initially when the rates were announced, I think the government was very much paranoid whether they will get the full revenue or not. Therefore, they kept the rates high. And then they found there is too much of backlash.
Yeah,
and when they came down with the rates,
no, that is the question I was coming to actually, that the government worried about whether it would be revenue neutral if they kept the rates low and if they would miss out on revenue. What is a revenue neutral collection money? The monthly run rate of 90,000 would make it revenue neutral vis-a-vis the previous year?
I think that's a very difficult question to answer.
Okay.
And I just share my, thoughts on that.
Okay.
At a broad level, if we look at the collections of central excise, service tax, CVD, SAD in the past, which are the central taxes, For financial year 17-18, I believe all of these in terms of the budgetary estimates were estimated to collect approximately 7 lakh crores.
Okay.
Now, what we do not have clarity is all states put together. When we consider VAT, luxury tax, entertainment tax, and a few other taxes which have been subsumed, what was that number coming to?
All right.
But so if we assume that to be 5 lakh crores, then what we are talking is both central and state indirect taxes which have been subsumed into GST is 12 lakh crores.
All right. So it should be 1 lakh crore.
Which gives it a run rate of 1 lakh crore per month.
Yeah, which we are not quite reaching, but maybe after the system stabilizes. Why don't we toss that to Mr. Movin Godino, the GST Council member from Goa is with us. Mr. Godino, the good news in December is that it's almost 10% more than the November collections. Your thoughts?
Yeah, I'm not surprised. I have always been maintaining that with a few glitches that were there, once we smoothen the ends, rough ends, revenue is bound to pick up because first of all, there is a base which is broadening. Once we lower the taxes, which we have done very consciously, though we were a little cautious in the beginning, that also is going to result in more people coming into the whole set and getting more revenues. It's a simple calculation, and we are also conscious about the leakages.
What is the shortfall now, sir, from what the states ought to get? What is the shortfall that the centre has to compensate if you were to calculate with today's collections?
Yeah, I think the shortfall after what we have broadly noted would be in the region until we touch about 1 lakh in a month. There is bound to be some shortfall. So, which I expect it to pick up once the e-way bill gets working fully. You will see the results. And why talk of 1 lakh? I look at revenues much higher than that once the e-way bill gets really working. Because then there is a foolproof system where people will have to comply.
Yes.
Now the compliance issues were there, we have sorted them out, most of them. Few things need to be done. We will be doing that. And as you have seen, every council meeting that takes place, there is something better happening.
No, that's true. But you know, just to help us understand this, we actually have Thomas Isaac back with us. Mr. Isaac, taking from that point, Movin was talking about how the e-way bill will get some trigger. So by Feb, what kind of an uptick can you expect? And we were talking to Mani about this before you got cut off. By when do you think we can hit that 90,000 crore figure? Would it be in just February itself?
I think there is, once the e-way bill comes and the return filing becomes normal, GSTR1, whatever new modified form it is, then I think the self-policing nature of the GST would fully become operational.
So in this financial year itself, we will hit 1 lakh crore a month, you think? February or March?
I think so. I think so.
Okay.
I think so.
All right. Okay, so we will have to leave it at that. Movin Godino, Thomas Isaac, Mani and Lakshmi Kumaran, thank you very much for joining us. This is positive news. As we gear up to the budget, if the government can be reasonably confident of getting even 90,000 crore, the extent of shortfall from the estimated money will be less, and therefore perhaps even the deficit will not look too ugly. Maybe we will not even reach 3.5, maybe we will come closer to 3.4 or 3.3% fiscal deficit. Definitely good news. At least tomorrow, tomorrow we don't have trading. On Monday, the bond markets will, you know, at least one thumb up.
Yeah, absolutely. We'll have to wrap up this show. Though we will take this discussion further and try to get some more fine print. But for now, thank you so much for watching. Stay tuned though. Taking Stock will take all the market action for the day and for the week forward on the other side of this short break. Stay right there.